All right, it looks like we're live. Welcome, everyone. Happy Friday. Thank you for joining us for another episode of Just Shilling. We have a great conversation in store for you today. And before we do get into it, if you are new here, folks, first and foremost, nothing that we discuss is going to be considered as financial advice. Number two, the opinions that we share of our own and do not necessarily represent our respective organizations. And last but not least, anything that's a little bit too controversial or spicy for a family dinner during the holidays, we'll avoid those topics, even though we are all adults here. So without further ado, let's get into it. And Tamara, thank you for joining us. Let's give folks just a quick 30-second minute elevator pitch about who you are before we get into the questions and how you got into this wonderful industry.
Sure. Yeah. Hello, everyone. Tamara Stevens. I'm a director at B2C2, running business development and sales in the U.S. and Americas region. I spent over 15 years in TradFi, focusing on OTC markets, specifically within fixed income, and recently made the pivot into crypto. And really excited to be here with you, Trevor.
Awesome, awesome. Well, this is a space that you joined actually relatively quite recently, but at a moment where, institutions are really kind of leaning in. So, what made it feel like this was the right time for you to make the move?
Yeah. So, I deliberately made the move when I did because I had always been somewhat interested in the asset class. But, I really felt like fundamentally the market structure was very similar to what we saw in fixed income markets, 10, 15 years ago. And given that there's been, this really like insurgence of asset managers and true institutional money coming to the asset class, it just seemed like the right time to get in at the early stage. It really doesn't seem like a speculative investment or asset class anymore. It really is more of, not should we get in, but like how do we get in safely and, scale safely within it. So that's really why I decided to make the move.
Wonderful. And before that, you had spent nearly a decade or more in traditional OTC markets. So, once you were actually inside of quote unquote crypto, was there anything that felt like right to you or familiar right away?
Yes, I would say, when you look at any asset class and understand sort of how institutional markets function, I think like really what you're looking at is market structure. And so it doesn't matter if you're looking in TradFi at equities or fixed income, what were like the main questions that an institution asks is, do we have pricing? Is there, appropriate risk reward? Is there a balance sheet out there that people are trading with? Do they trust their counterparties? It's really about like, are the markets structured and functioning like people are familiar with in TradFi? And if so, then the market structure is kind of almost mimicked to what it is in traditional markets.
Nice. And were there any skills in TradFi, in your career that ended up being more useful than you probably expected right out the gate?
Sorry, I lost you there for a minute, Trevor.
Yeah. So, were there any skills from your TradFi career that ended up being more useful to you than you expected?
Yes, I think kind of along the same vein, it's really, the market structure. So like understanding how, to warehouse risk or how humans interact with automation and what automation does for the trade life cycle. It's like how do clients behave under stressful situations? All of those sort of like market structure related items were very familiar to me. And so although, crypto and digital assets themselves move at a much faster speed than what we're used to, those market structure items still align with TradFi and will
Nice.
continue to do so.
Yeah, yeah. And for those people listening for the first time that really may not fully understand what a firm like yours does and how you guys operate, what does your day-to-day look like usually? I know that that's a
Yeah.
hard question because there's probably no day that looks the same, but what's a typical day look like for you?
It's true. It's true. So we are a principled market maker, and we are very niche and focused on that sole responsibility within the marketplace. So, we're not an exchange. We are truly the liquidity engine behind so much of what drives, institutional investing, and also sort of what you see behind exchanges and other avenues of liquidity sourcing. So, day to day, I'm working with hedge funds, asset managers, exchanges, fintechs, et cetera. And a lot of it is around, designing trading workflows or structuring credit and collateral frameworks, automating executions and settlements. It really kind of runs the gamut. I would say it's almost more like capital markets advisory than a true sales role. But yeah, it looks different every day, and it's always interesting, and it's such a fast evolving marketplace that it's different every day.
Never a dull day, never a dull moment in the space for sure. It feels like time moves a lot faster in this space. And one of the things that really stood out to me when we originally chatted was that you mentioned that, or that you described rather as B2C2 as probably being one of the largest names that people have never heard of, right? So why do you think that this type of critical market infrastructure really kind of stays invisible and behind the scenes until something breaks and people become aware of it?
I mean, I think the answer's in the question, right? Like, infrastructure that works is not talked about. We love the idea of not having to be like the name that everybody knows because something broke. If we're not like known for a break, we are doing things right.
Yeah.
Infrastructure should be quiet, it should be behind the scenes, and it should be functioning.
Nice. And, also too, I think that was it like 40 exchanges, that you're kind of working behind the scenes and, you're not really consumer facing type of brand. So why is this role, so important in the crypto ecosystem overall to make things function right?
Yeah, so, I think that, from the retail perspective, there may not be as much knowledge base to how much liquidity and the liquidity engine behind exchanges and other retail facing um, applications are really driven by the deep liquidity that's being aggregated and created by global institutional market makers.
Mm,
And without the liquidity engine of some of these firms that are able to, like, principled market makers warehouse their own risk, agented market makers are matching off trades. But at the end of the day, you have to have the depth of liquidity there for an exchange or an order book to function. Otherwise, it's just air. There's nothing there. So, we are there to add depth to marketplaces and exchanges. We are there to help reduce volatility. Really, we're the ones that absorb a lot of, the risk in downturning markets. We're not the creators of the issues. We tend to be the absorbers of the issues. We also enable very large trades to happen and attempt to facilitate that with minimal market impact. So there's just a lot that goes behind the scenes. And that's really where we sit and help the industry function.
mm. And that's a really good transition as well too, because I've seen it a lot on X and other places as well too, right? Market makers, especially when there's a lot of volatility, they tend to kind of get the blame when things are very volatile, right? So from your seat, what do people most commonly misunderstand about market making and crypto in general?
Um, Look, it's always easy to point fingers, right? But at the end of the day, like, we're the ones that are taking on the inventory to help, like, manage the risk that's happening during stressful times. And if there isn't that type of actor in the marketplace, the basically volatility would be untradeable. So
Mm,
the ability for volatility to continue trading globally, we can settle globally. We are also a proprietary market maker. So we have the ability to take our balance sheet and sort of absorb some of the impact so that the world continues to keep functioning. I think there's also some misconceptions about how the difference between what happens in TradFi versus volatility versus what
mm,
happens DeFi. And so like something that happens in our world is like anytime there's sort of a margin call, there's the ability to be automatically liquidated. We saw that happen, just a year ago to some of the largest exchanges and market makers. And so, yes, the technology is kind of like enhancing processes, but there are some, nuanced things that I think the market has to come to terms with. That's how we play here. But I think at the end of the day, we are not the creators of the downfall of
Yeah.
any marketplace. We were really absorbing and taking liquidity hits so that the market can continue to function.
And there's also too been a lot of skepticism around like market making as well too. And I think that, this could come from a lot of just misunderstanding. So how much of it is just misunderstanding or miseducation versus do you think like real structural issues in the market per se?
I think maybe it's a little bit of both. I think,
Mm,
it's hard to derivate from, a marketplace that's been functioning for, a century, and to create a place where things are moving faster and think that we're going to make this big impact in structural change and it's all going to happen overnight. It's not going to. I think what people should understand about market makers is like we are in the business of making sure that markets continue to stay liquid and that we price risk globally. So we want everybody to be able to have access to liquidity in all markets at all times. And so I think, when you think about market makers and you just think about like too big to fail, I think what people should probably focus on is more about how we are liquidity engines helping to keep the momentum going, as opposed to some kind of bad actor that's working against our clients. We are there solely for the benefit of the global marketplace.
yeah. And, one thing that stands out, about B2C2 as well too, is that you don't custody any assets, right? Or you don't run your own kind of asset management arm. And why do you think that that kind of structural independence matters so much to institutions right now?
Yeah, I think that there's arguments to both sides, but in my opinion, as we've seen, the structural strength of the marketplace continue to evolve. So we're seeing, a lot of custodians and new types of custodians and custodial technology coming to the marketplace. We're seeing a lot of new, broker technologies. We're seeing order management systems come to the marketplace, and there are places where that's kind of a one-stop shop. But what we're seeing from our institutional seat is, everyone is getting to have a seat at the table and being agnostic to where assets are custodied. We can really facilitate and connect to any of our clients. And so, our incentives are clear. Our incentives are aligned with our clients, and we just don't have any conflicts of interest. We're not pushing to one venue or another. We just want the best outcome for our clients.
It's fantastic. One of the other things that stood out too when we had our original conversation, gosh, several weeks ago, time flies by, it really does. But it was really great that, that your organization has a reputation for being very selective, right? And not chasing hype. And I think that it's so easy to get kind of lost in the sauce, if you will, with so much going on. So in a market where things do move really fast, why is, saying not yet sometimes the smartest decision?
Yeah, I think where we stand in the marketplace, this might be a very very intense term, but survivability is where we need to be.
Yeah.
So chasing hype versus chasing structure, or including structure in our analysis, is like at the core of what we do to assess if we're going to support any sort of crypto or like or not. I think, discipline in what we do builds trust with our clients. And, we do an entire market analysis before we add any sort of asset to our offering. And because of that, we've, survived several um, FTX-like collapses. We've been around for 10
Uh,
years, and risk assessment and institutional compliance are at the forefront of everything that we do.
and I think this is kind of going into the next question as well too. In one of the core differentiators is that due diligence, your ability to have that level of due diligence. So, how does that kind of discipline actually, kind of help protect institutions and your clients when new assets do actually come to the market?
Well, of course, there's trust. Our clients trust that when we are adding an offering to our menu of offerings, that we've done the due diligence to understand, what is the liquidity profile, what are the compliance constraints around it. Does it fit what we want or what we need to provide to our clients? But I think, when we're talking about institutional growth and adoption, it really comes down to how, we saw institutional growth and adoption in TradFi. It's reporting,
Yeah,
it's compliance, it's custody, it's, all the plumbing that makes it all work, all the infrastructure that makes it all work. And we're just seeing that part of this marketplace mature very quickly, obviously comparatively, very quickly. And so now with all of these new entrants, especially institution wise, as I said earlier, it's not like, do we do this? It's like, how do we do this and how do we scale it? And all of these solutions are sort of coming to the marketplace very quickly. And you see ETF wrappers, you see all of these sort of traditional finance sort of structures being tokenized into our world so that they can act, within DeFi rails, and really get the benefits of what like blockchain and decentralized finance has to offer. But again, that had to scale with all of the boring plumbing, and that's kind of the inflection point we're at right now.
yeah. And speaking of things that are definitely getting a lot of traction, unless you've probably been living under a rock, you probably heard about stable coins, right? So, and they're everywhere now. Fidelity just came up with theirs as well too. So, where do you actually see them being used in the real economy versus institutions just using it as something because that's the kind of the easiest thing for them to get comfortable with?
Yeah. I think we're going to continue hearing a lot about stablecoins going into the next few years. I think there is the reality of stablecoins and the dream of stablecoins. At B2C2, we've always believed in the proliferation of stablecoins. We do not think that it's going to be a concentrated marketplace as it has been historically. We see, as you mentioned, a lot of major financial institutions and alike coming to the space, participating with either their own stablecoin or acceptance of stablecoin. And a lot of that has to do with like, how do we make sure that we don't get left behind? But also, how do we take advantage of these new rails to allow us to either move money faster or represent currency in a better way? And there's so many facets to stablecoins now because, when we originally had the stablecoin idea, when you think of like a Circle and a Tether, you
Yep.
think like they represent the US dollar, right? So they represent a way for us to move currency and move money. But what we're really seeing is there's a lot of value in what we call programmable money. And it doesn't just need
Oh
to
my God.
represent a currency. We could see, a value add to infrastructure, like sort of like a closed loop stable coin that's really just designed to help store whatever value and move whatever value you're looking to move. So whether, it's cross-border payments that represent actual currency or potentially value of whatever that firm is trying to move from one place to another, stablecoins really have, quite a lot of potential usage. I probably can't even imagine, what could be going forward. Um, but what I will say is that we believe it's going to continue growing. We've created at B2C2 a facility called Penny, and this facility is there to facilitate fungibility of stablecoins. So we want all participants in the stablecoin space to be able to access and use the stablecoins that they want to use and be invested
Oh,
into.
fantastic. Yeah.
Yeah, and so we can talk all about that, but I think before we move to that topic, it's important for everyone to understand that 2025, the year of stablecoins, still 99% of that was speculation and institutional investment. only about 1% of it was true real economy, pure payments.
Wow. Yeah.
Um, and we're definitely, I mean, I'm not a true betting woman, so to speak, but I would bet a lot that proportion is going to shift going into 26 and 27.
Yeah. And, from an institutional perspective, what do you think really needs to be in place before the amounts of capital move from, this kind of cautious exposure to kind of more true, like deeper participation in more crypto native markets?
Yeah, I think it's a great question. I think we've seen a lot of that sort of cycling risk on, risk off. And I think, in times, a lot of people get caught in the narrative of like what's happening now.
Mm,
And, Bitcoin's only been around for 20 years, maybe, that we've known about.
yeah.
And, to assess it against something like gold, which has been a reserve for over like 5,000 years, and to compare them as like equal reserves is like very difficult. And so when we see the downturn of Bitcoin and people are seeing the depegging of Bitcoin from going down and gold going up, and also like the US dollar going down, there's just people have a flight to quality. But I think, when you assess what's going on, it's really, hey, if there's stress in the market, we need to be able to move quickly. Bitcoin is 24/7, 365. Gold is sort of like the reserve asset we all know. But, I think eventually those that are invested in Bitcoin are investing for the long haul and see that it's going to be the reserve that is the bet on blockchain technology being the future.
Yeah, for sure. And just the mindset from institutions, how they're treating the two, are really interesting as well too. Gosh, our time is almost up here, so I do have a few more things that I wanted to cover before we kind of open it up for you to talk about some things in your roadmap as well too, and a little bit more about your team and what makes your organization special. But you've watched very experienced professionals leave their very stable careers, to get into this space. So, what do you think the signals are from where this kind of industry is headed from that kind of behavior?
Yeah, I think so much of what decentralized finance and crypto was historically was like centered around hype, and
Mm,
professionals are not leaving their jobs, their jobs where they're making a ton of money for something that is considered hype. Like we are
yeah,
seeing true market structure changes, real revenues, institutional client participation, and I would say for those that are looking to leave, there's obviously a ton of what we call wild, wild west opportunities that are definitely more have been proven to be more hype than true infrastructure plays. But what crypto really needs, in addition to all the supply of all of the great things that we have from blockchain, is professionals that
yes,
understand the financial markets and understand financial market structure, and leverage what we knew from TradFi to bring all of DeFi into the institutional marketplace. That's how it's going to grow. And we love what blockchain has done, and we love what we see happening all over. But at the end of the day, we need to be able to have sufficient belief in what we're doing, and the compliance and revenue and all the knowledge and rails
yeah.
that make it work in an institutional marketplace.
It's really great too. I mean, especially within the last year, just to see the collaboration between, private and public sectors, government and regulation, compliance, and what we've done so far has just been amazing. And there's still a lot to go, but I think that we're heading in the right direction for sure. And you know, kind of some of the things that we touched on this a little bit earlier, but when there are market sell-off, and then there's the sentiment turns negative, infrastructure like yours, right, and companies like yours, it continues to build no matter what. So how do you personally stay grounded during these types of moments of volatility, and when there's just so much negativity out there?
Yeah. That happens frequently, especially in, newer entrants to a marketplace. But I think, when I think about how any infrastructure has made its way into mainstream, whether it's something like the internet or blockchain, as I believe it will be, you can't think in terms of days and weeks of volatility. You really have to think about years,
Yeah,
decades. So every sort of cycle where we see something truly detrimental to this marketplace, what I've seen is growth. um, we're outliving these downturn cycles, but I think what we see is really almost, new ideas and better protection, more regulation. We see like true growth after the downturn. So, volatility downward volatility can feel very, very difficult. And I know a lot of crypto investors are like, 2025 was the worst, but
yeah,
please look at your portfolio over 5 years versus one. Focus on how much, like, how rails are changing everything that we're doing and how they
yeah.
continue to evolve as we hit bumps in the road, as any young emerging marketplace does.
Yeah, I kind of look at it as always opportunities, right? And obviously not financial advice, but there's a saying, when in doubt, zoom out, right? Look at the bigger picture for sure. This has been an incredible conversation. One more question before I kind of wrap things up here. Looking
Sure.
back at your own career path, right? What advice would you give someone in TradFi who is seriously considering potentially making that jump that hasn't done so yet?
Don't chase hype, chase infrastructure. Like, chase, like, look at what a company is doing, how they're coming to market, who they're interacting with, where they're finding their niche. It shouldn't differ too much from what someone is doing from TradFi, but I think, you know, like, understanding where you're going and what you can take from your TradFi experience and bring to DeFi is just so critical to what we're trying to build in this space. And that, I would say, that would be my best advice.
Awesome. Very sage words of advice for sure. And tell us a little bit about, your team, your dynamic, anything else that you're working on specifically, anything that, folks that, like I said before, are tuning in or get a chance to kind of look at this and listen to this when we do put it up on YouTube and things like that. What should they know about what's something exciting that's going on? And lastly, how should they get in touch with you as well too, if they're looking to maybe communicate, collaborate, or just learn a little bit more?
Yeah. So, we talked a little bit about our stablecoin fungibility facility, Penny, which is, really unique to an agnostic market participant. And we are really excited about what that looks like for 2026 and 2027. But, our core competencies have always been, Bitcoin, probably the top 200 coins. And we have an extremely intelligent and well put together global options team who's trading derivatives all day, every day. And we've hired an extremely talented head of derivatives trading out of London,
Nice.
who, we have a lot of focus on that part of our business as well as our structured products business. We have a credit facility that's really able to facilitate almost any structure that you could think of, to be able to, either borrow or lend, um, anything that we support. So, we've really advanced our offering and come a long way from just offering like Bitcoin spot trading. And to take advantage of all of that and to see what we're doing, you can always visit www.b2c2.com. That's our landing page. Everything is there. If you want to learn more about Penny, same website, /Penny. And you can find out more about the Penny facility there. But again, we've really seen our core competency shift from just spot trading to true options, derivatives, strategic trading. And we're excited to facilitate, the rest of the marketplace for speculative hedging, borrowing, lending, whatever really the institutions need, to keep to keep the world working.
I love it. I love it. And how are you most are you frequently on like LinkedIn, or like what's some way that if folks are tuning in, if they wanted to connect with you as well too, what's the best way to do that?
Yes, LinkedIn. We, us in DeFi, and Trevor, you're probably the number one person behind it, like to say this, but
Always on
LinkedIn.
LinkedIn.
Yes, LinkedIn has a wealth of knowledge. You can connect to everybody at DeFi via LinkedIn. There is a conference every single week of the year in DeFi. So you will likely bump into me at one of them at some point, whether it's Consensus or
Nice, yeah.
Money 2020 or BTC Vegas, Global Alts Miami, Bitcoin Investor Week next week,
Yeah.
or 2 weeks. So there's just a ton of opportunity to get involved in the space and connect with all different types of participants.
Yeah, I'll be there next week too. So we can actually get a chance to meet IRL. So this is
Yeah.
awesome. Well, I know we've gone over a little bit. I don't want to take you. This has been really, really, really insightful. I've learned a lot here, and hopefully the people in our audience has as well too. And if you weren't able to tune into this live, we'll get this up on the socials. But thank you so much for joining us today, and for everyone that got a chance to tune in. Thank you. Have a great day. Take care. Bye, everybody.
Bye.